Hey, Happy New Year and welcome back to the new tips of financial suits. Good to see everyone here today. We've been talking to a lot of clients over the years and also been reading a few comments on some of the video, and one of the questions has always been asked for me is what's the difference between FHA and conventional? Which one is better? Well, obviously conventional and FHA are the top two popular loans out there that everybody can leverage if they qualify for. And there's no clear answer about which one is better than the other. It's actually which one are more suitable for the borrower at the time of the mortgage. Conventional and FHA, they have their own pros and have their own cons. Well, today let's jump right into FHA versus conventional. What's the difference between those two? Well, of course, when we come to a mortgage, we all know no matter what loan program that you're going with, the first thing that the lender look at is your credit score. Now, those two programs have different minimum credit score that they can work with, and it also depends on the overlays of the lender as well. However, typically a conventional require a minimum of 620 when it comes to the minimum credit score, and FHA's the minimum is of 580. However, most of the time, if you go with a lender, they might have some overlays. For example, a conventional overlays of a lender might require a minimum of 680 instead of 620. And for FHA, some lender might require the minimum credit score to be 620 instead of 580. So, but the good thing is that you have the option between as low as 580 and 620 as long as the lender allow that kind of minimum credit score. Next thing is that they're looking at the foreclosure or bankruptcies in your credit report if you have any. FHAs are a little bit more lenient when it comes to such thing. FHA tend to be more lenient when it comes to foreclosure, short sale, or bankruptcy. After 3 years of foreclosure and short sale, or 2 years after bankruptcy, they accept your situation. However, with conventional, it takes 7 years from foreclosure and 4 years from short sale or bankruptcy. So that's the timeline that you might have to keep in mind if you have one of those situations. A lot of time, there's a myth that only FHA allow smaller minimum down payment of 3.5%. However, actually conventional allow first-time home buyer or certain type of borrowers can put out as low as 3% for down payments. Next thing is the source of the down payment. The good things of both of these programs allows 100% gift for this type of down payment. Of course, only for primary home. Next thing, but one of the most items that everybody concern and talk about is the interest rate. Which one give you better interest rate? It's very hard to compare because the interest rate, of course, it depends on the credit score. Not typically a loan program. FHA and conventionals are quite competitive when it comes to interest rate. However, if you have a lower credit score, FHA might give you a better interest rate than conventional. But if you're already in a good credit score, conventional might give you a better interest rate. So definitely take a look at both of these program interest rates so you know which one are suitable for you. Another thing is about the private mortgage insurance. Now, when it comes to this, most of the time FHA tend to be a lot more expensive because with conventional, only when you put out less than 20% of down payment, you have to pay PMI, private mortgage insurance, and you can also cancel it once you have at least 20% of equity in the house. With FHA, however, if you put down less than 10%, you will have to pay the private mortgage insurance for the rest of the term or until you sell the house or refinance out of FHA. Or if you put out at least 10%, you still have to pay at least 11 years for this monthly mortgage insurance. On top of that, FHA require 1.75% of the loan amount as the fee called upfront mortgage insurance premium. You can call short for UFMIP. However, FHA also are more strict when it comes to home appraisal and inspection. There's a lot of conditions when it comes to that. Make sure the house are in a very good shape before you can move in. Conventional, they still protecting you and make sure you have a good shape house, but they tend to be a little bit more lenient when it comes to these kind of inspection and appraisal. As of right now, in the new year of 2021, FHA had increased the loan limit to $356,362 for the maximum amount they lend out. However, in the higher cost area, this number can go up to $822,375 only in the high cost area. But for conventional, the maximum loan limit for outside of high cost area is $548,000 and $250. So to recap, FHA only allow you to borrow maximum $356,362 versus conventional up to $548,250 for the area outside of high cost. High cost area usually, I believe, Hawaii, Alaska, maybe California, and some county in the country that you can borrow up to $822,375. Anything above that will be considered jumbo or high balance loan, which will be in a whole different category. Well, that was the difference between FHA and conventional. I hope this information will be able to give you better ideas when it comes to choosing which loan program are more suitable for you. And of course, talk to your mortgage loan officers or brokers or bankers, whoever is helping you with that mortgage process, so that way they can give you more detail that particular to your unique situation, because everybody's situation is different. If you have any more questions, feel free to comment below, or you have more ideas, feel free to DM me, comment below, and let me know which are the topic you want me to talk about. Thank you for watching. If you like what you see, feel free to hit like, subscribe, and hit the bell notification, and we'll see you next time. Welcome to T Financial Suite again.